This chart tracks the stock price of Micron Technology through the early months of 2026. It is up 68% year to date. But Micron doesn't design the flashy AI processors that dominate the headlines. They don't make the logic chips like NVIDIA or AMD do. They manufacture the memory. And right now, memory chips have become the single most critical and lucrative bottleneck in the entire AI supply chain. Investors are pouring money into the stock, betting that artificial intelligence has permanently rewritten the rules of the memory market. But a quick look at the history of this industry suggests they might be walking right into a trap. To understand the danger, we have to look at this historical tracking of memory prices, governed by the iron law of the industry. Manufacturing memory types like DRAM and NAND has been a commodity business, driven by extreme boom and bust cycles. The mechanics are remarkably consistent. High prices trigger companies to build more factories. Those new factories create a massive supply glut, and that glut sends prices crashing right back down to the floor. These crashes are financially devastating because memory fabrication plants require billions of dollars in capital expenditures just to keep the clean rooms and manufacturing lines running. Every few years, investors convince themselves that the cycle is broken, and historically, those who ignore the gravity of the market end up paying a steep price. AI accelerators, however, cannot run on standard commodity memory. Training massive language models requires feeding processors an immense amount of data all at once, far more than standard flat modules can handle. The solution is high bandwidth memory, or HBM. Instead of laying chips flat, HBM architecture stacks flat DRAM dies vertically. These stacks are pierced by microscopic silicon vias, pumping massive amounts of data directly into the AI chips. Because of the intense engineering required to manufacture them, HBM units carry structurally higher profit margins than standard memory. This is the exact formula driving Micron's stock surge. Every single percentage point of their production that shifts from standard memory over to high bandwidth memory directly improves their overall profitability. The 2026 rally is being driven by a perfect storm of market forces. First, hyperscalers are spending billions on AI infrastructure. Second, memory makers severely cut back their factory capacity during the 2022 to 2023 downturn. And third is the squeeze. This capacity meter illustrates the problem. Manufacturing a single HBM wafer eats up vastly more physical factory space than standard memory. By shifting lines toward HBM, companies are artificially starving the market of conventional memory. With conventional memory in short supply, prices are rising across the entire broader market. This dynamic has allowed Micron to lock in long-term, completely sold-out agreements that stretch well into 2026. So this current upcycle is not an illusion. Layering massive AI demand directly on top of an artificially choked supply chain creates a genuinely improved earnings backdrop. Yet, despite the soaring stock price, Micron is actually the underdog in this specific technology race. The dominant first-place supplier of HBM for NVIDIA's flagship parts is SK Hynix, and the technology giant Samsung sits right behind them in second place. This creates an immediate operational threat. If either SK Hynix or Samsung solve their production yields or accelerate their factory expansions, the current HBM shortage will end, and Micron's pricing power will compress right along with it. Right now, Micron is successfully leveraging a temporary industry bottleneck, but a single failed qualification test with a major tech client could reshape their financial outlook overnight. So, does this time break the rules? No, artificial intelligence has not repealed the iron law of memory. What we are watching is an exceptionally powerful cyclical upswing disguised by a structural shift in technology. When the inevitable capacity expansions happen, the market will revert. And there is another macro risk to consider. The most advanced packaging for these chips happens in a highly concentrated area of Asia, meaning any geographic disruption hits all the major players simultaneously. Treating a cyclical memory stock like a permanent buy-and-hold compounder ignores how this industry actually operates. Successful memory investing requires active management. It means sizing your positions based exactly on where the boom and bust cycle currently sits. This dashboard tracks the 3 key signals you need to monitor to spot the top of the market: Micron's internal HBM mix, hyperscaler capital expenditure guidance, and the spread between contract and spot pricing. Retail investors also need to watch for overlapping exposure. Owning shares of NVIDIA, AMD, and Micron all at once concentrates an extreme amount of risk into a single AI thesis. Using brokerage platforms that offer fractional shares allows you to precisely size that risk without overcommitting your capital. The investors who will walk away with their gains intact during this supercycle are the ones who respect the undeniable power of the AI boom, but never forget the historical inevitability of the bust.